Your credit score. What is it? It's only a number, isn't it? Why should I care? So many questions. In this episode, we're going to address your credit rating and how it can heavily impact your life and how you can fix any issues that may appear on your credit file. Remember, knowledge is power. So let's get into it.
Welcome to the Money Nest, your source to not becoming a financial liability. You will learn how to become fiscally responsible, save money, and grow that nest egg of yours. The Money Nest is proudly sponsored by A1 Bookkeeping Services, serving small to medium-sized businesses with bookkeeping and providing tax services to people just like you. You can find out more info about them at a-1bookkeeping.com. Now, here are your hosts, Suzanne and Mark McKinney.
Welcome back, everyone. I'm Mark, and I'm so excited to welcome you to this episode of The Money Nest.
And I'm Suzanne. So glad you could make it here to episode 5. I remember back in the day when the show's trailer was just being released. Oh, that was so long ago. It's been a few months now. But before we can get into this episode, we want to take a moment and remind you to please like, share, and subscribe to The Money Nest. This allows us to have the widest distribution possible, and it allows us to help share the content of the podcast and gives us encouragement to upload even more episodes. Your help to get the word out is very appreciated. Once again, please don't forget to like, share, and subscribe to The Money Nest.
Surely you've heard the basics of your credit score or credit rating. I think you'd have to be living under a rock if you haven't heard these phrases. What we are going to do today is break it down for you in simple to understand terms so you can better understand what it all means, how it affects you right this very moment, how we all can have a better appreciation for it, what it takes to make it work for us, not hold us back, and how we can repair the problems in our credit files.
We're going to turn this episode around a little bit so that it's more of a Q&A format, just to spice things up a little. Now, we think it'll be a little easier to follow. Mark will ask the questions, and I will give you our take on how it all comes together.
That's right. We've got lots to talk about today. So are you ready?
Away we go. Ask away, Mark.
Let's start with our first question. Your credit rating and credit score. Are these the same thing?
Well, the answer can be both yes and no. Your credit score is how you rate as an individual based on your credit history, or lack thereof, where your credit rating is how you are compared to the overall population. So both terms are important, but keep in mind that you only have control over your credit score. That's the most important one of the two anyway. So we'll focus largely on your credit score.
So would you say that most people aren't concerned as they should be about their credit score?
Unfortunately, yes, until they need it. But by then, it's too late. Your credit score defines you in many ways. It's used to buy a car, a home, get a loan of any type. It can impact you when getting a new job or even getting a government security clearance. If you think you don't need any of these, then you're either rich or you're ignoring time, because just about everyone needs a good credit score in one way or another at some point in their life. Most often, you will rely heavily on your credit score many times.
If I have a bad credit score and a lender denies my loan, can I just fill out a form and get it fixed and it's all good to go?
Absolutely not. It takes time and effort to repair your bad credit or even to boost your credit score from good to excellent. When I say it takes time, it can take a few years to make those repairs. It's certainly not something that can be fixed overnight.
So if it's not a small fix, then when should you start working on your credit?
That's an easy one. At age 19 or whenever you can start to get a loan in your name or a credit card, line of credit, or some other sort of lending. The age difference may vary where you live. We live in New Brunswick, Canada, so our age to start working on your credit is 19.
We'll use our province for example. Say that I'm 19 years old and I have no need for a loan or credit card. I think they are evil because my parents are telling me to pay everything by cash. If you don't have the money, then you don't need it. Then why should I care about credit?
Well, there are several things wrong with that statement. Although it's a popular thought, Here are the problems with thinking that way. At some point or another, you're highly likely to be going into a situation where you're going to need credit. Like maybe renting a car. You'll need a credit card to do that. And of course, to get that credit card, you need credit. You got the wrong advice from your parents. They may have had your best interest in mind, but maybe it's not the most sound advice. That is usually something that parents tell their kids to stay away from, as opposed to teaching them right from wrong. As soon as you can get credit in your name, at the earliest age possible, then you should get it. Now, you need to understand that if you can't be responsible with cash, then credit may not be a good thing for you. But if you can handle it and live within your means, then of course you should get some credit. Even starting with just a simple $1,000 credit card is a great place to start. That's all it takes. You can grow your credit file from there. Although it's a good idea of not buying something unless you can pay for it, that may be true, but credit is not a bad thing. It's not evil, as long as it is managed correctly. Use your credit card and pay it off in full each month. That's right, I said pay it in full each month. This way, you'll have the best of both worlds. You're getting and using your credit, and at the same time you're not buying something unless you have the cash to back it up.
Managing your credit is key. Don't just go and get credit and hope for the best. What we are saying is management is number one. Then a plan of attack is step 2. So, you say to get credit as soon as possible, and let's say we manage that credit correctly. What does managing my credit actually mean?
Here are the key points to remember. You need to stay on top of your credit. You need to know your credit score from time to time. Just don't get obsessed with it by checking it daily, weekly, or even monthly. It takes time for all creditors to report to the credit bureaus and for those numbers to be reflected on your file. You need to pay your bills on time. Don't have too much credit all at one time either. Keeping old credit is better than always getting newer credit. Never miss your payments, even by one day. No excuses. Pay on time. Avoid filing for bankruptcy at all costs, and do it only if it's the last option that you have. Your credit score will bomb immediately, and you can kiss those years of good credit efforts goodbye for a long time to come.
How much do I have to know about credit up front?
You don't really need to know that much, just what we've talked about up until this point, as these are the most important factors in my mind. Now, be smart with your credit, get it early in life, and be responsible with that credit. If you know only these few factors up front, then you are good to go. All other points will come in time.
So, there are other things to consider that we haven't addressed yet.
Yes, that's right. There are still a lot more things to consider, which we're going to talk about, but these are the basics that anyone that's new to credit or doesn't understand much about credit can grip onto and learn more from.
Is it the bank or the lender that I need to impress with my credit history?
Well, that's a bit of a tricky question. The answer is yes, but we need to mention that the banks or lenders generally get their credit information from national credit bureaus. For example, here in Canada, we have 2 different ones, Equifax and TransUnion. These are basically clearinghouses for all the credit reports. The credit bureaus collect data from all lenders based on your past history. They hold those details and report them to lenders upon request. This is mainly done when you apply for a loan, credit card, or some other sort of lending. The banks or lenders will know your history based on the banking that you do with them, but key factors that organizations lean on for information are the credit bureaus.
How do I know what my credit score is?
Just reach out to the 2 credit bureaus and request an updated credit report. Again, that's Equifax and TransUnion, at least here in Canada. Now, it will differ in your own country, and you can find them online. Don't just contact one of them. Contact both. Different lenders report to different credit bureaus, so to get a clearer picture, don't ignore one and call it done. Do your homework. It's worth your investment of time.
What will the credit report tell me when I get it? Is it easy to understand?
Yes, the credit reports that they provide today have come a long way from years past. when you request a copy, which can sometimes be either free or may be available for a small fee after you've proven who you are by sending in proof of your identification. These reports are much easier to understand now, more so than they were just a few years ago. The ease in understanding is particularly because of the government regulations that have been forced onto the credit bureaus to be more transparent to the general public about the details held on their files. After all, it is your file, and you should be able to access it and, of course, understand it.
Okay, Suzanne, I've heard people saying stuff like, I have something like a 739 credit score. Is a higher number good or bad?
Actually, if you've got a 739 credit score, you're doing very well for yourself, credit-wise anyways. The system works like this. The clearinghouses use a scale that runs between 300 and 900. Don't ask me why it starts at 300. It's just one of those things that we don't need to know, and it's really not that important. The lower you are in the credit score, closer to 300, the worse your credit is. The higher you are, of course, the better your credit rating is as well. Here's the scale of the 5 different categories. Starting at 300 to 574 is rated as poor credit. Below average ratings run from 575 to 659. Moving on to 660 up until 689 is fair or average credit. Now you're going to have a good credit rating if your score is between 690 and 740. From 741 to 900 is an excellent rating.
Okay, if poor credit is 300 to 574, that's a big span to try to get to the next level, isn't it?
When you get credit, you don't start at the bottom and work your way up. You start in a neutral position and you go either up or down from there.
How hard is it to go from an average credit score to excellent credit?
It's not difficult at all. Just follow the few basic principles that we had discussed earlier, and you're on the road to getting a more improved credit score over a few months. At least it's not over a few years.
What takes so long is you need to have your credit for an X amount of time. The banks or lenders have to report to the credit bureaus, and only then do the bureaus issue you a credit score. It's largely based on the reporting period of your lender to the agencies.
That's right, Mark.
Well, with that said, Suzanne, how often do lenders report to the credit bureaus?
Well, they report on their own schedule based on each of the lenders. But you can be rest assured that if you start to have bad credit with a credit card or a loan, you're going to see the results of your actions a lot faster. So you do need to be very careful.
Getting back to the credit report, what does it tell you? It must be more than just a credit score.
It does tell you a lot. Oftentimes, there are mistakes on your credit file that you have the authority to reach out to the different credit bureaus to correct. The credit report will specify things like your name and any previous names that you may have had. It'll show your current and previous addresses. It also shows your social insurance number. It has a list of your payment history with each of the creditors. The report will show any indication of bankruptcies. You'll see things like court judgments, along with a list of all of your lenders. Your credit limit with each lender will be displayed. It's going to show the last reported account balance for each credit amount. And it's also going to show the type of credit that you have with each lender and how long you've had that credit with that lender for.
Now that's quite an in-depth report, really. Therefore, we suggest getting your report at least once every year. You should review it and dispute with the bureaus any issues you find that are incorrect, like accounts that you close that aren't reported as such on the credit file. If you do request an adjustment to your file, you should check back in a couple months. Make sure you review it again to ensure that the changes you requested have been made. Just keep in mind, if you have a credit account open with a lender, you can't just close it through the credit bureau. You have to do that through the lender. And when they report to the credit bureaus during their next reporting cycle, you should see the change. It could take months to fully close an account. Here's another question. What factors influence your credit score the most?
The actual formula that each credit bureau uses is a highly guarded secret for whatever reason. It's like ranking number 1 on Google. We can give you the key factors, but there are variations based on each of the different credit bureaus. The things to watch for are items like payment histories, This is about 35% of your credit file. Amounts owed on your credit, this is worth another 30%. Already we're at 65%, which is the bulk of a person's credit file. The length of credit history with a lender, this only ranks at about 15%. The types of credit that you have, that allows for about 10%. Some forms of credit do rank higher than others, like loans, mortgages, credit cards, and lines of credit. And new credit is worth about 10% of your overall score.
Like you said earlier, you need to pay your bills on time. Always pay the required payment. When you need a credit account, use it for a longer term as opposed to a shorter time frame. And don't allow your balance to ever come close to your credit limit. Keep at least a 25% gap between your balance and credit limit. These simple practices will give you a much better credit rating a lot quicker.
The reason for having a credit account for a longer time is to have history with the lender. The lenders and credit bureaus get to know you over a longer duration rather than only over a few months to a year, which is not really long enough for you to have credible credit.
Soft and hard checks? Now that sounds confusing.
No, it's actually easier than you realize. A soft check is when you check your credit history or when someone else you authorize checks your file for non-lending purposes. So maybe an employer, a landlord, that kind of thing. But a hard check is when someone you authorize checks your history for lending purposes and how often your file is checked over a short period of time. Well, that's going to impact you too. The soft credit check is okay. It has no real effect on your credit file. It's just an inquiry on your credit file to make sure that you are a responsible payer. However, a hard credit check is okay at first, but if you have a few over a short period of time, then that means that you're out credit shopping and are likely being turned away by lenders for one reason or another, and that you're not qualifying for credit. So, beware when trying to get a loan, buying a car, getting a mortgage or a credit card, or any other type of credit, and you keep requesting the various lenders to perform credit checks on you. It will impact you negatively if you do it repeatedly.
So if you are shopping for a car, mortgage, or that sort of thing, you should shop first, and only when you're getting very serious to buy, you can then give your lender authorization to check your credit file to see if you qualify. Because if you have several credit checks, then your credit rating will drop, thus giving you a worse credit overall rating, and you may qualify for even less of a loan or a high percentage in interest.
That's right, you've got it. It's probably the fastest way to bring down your credit rating so quickly because it's in real time. They aren't waiting for a lender to report your payment history.
If I have a credit card that I no longer want, can I just cut it up and be done with it?
Absolutely not. Cutting up a credit card goes against what we talked about earlier. You need to contact the lender, have them close the account, then you can cut up the card. But don't forget to check your credit file a few months later and make sure that the account is closed. Remember that there are 2 different credit bureaus here in Canada. Check them both.
Wow, this is good, solid information. We know about a credit score, a credit report, how the score is tallied, when you should apply for credit, and where the details come from. Let's take it back to the beginning for a moment. Think back to when you said a parent tells you to pay everything by cash, or that you think credit is an evil thing. How does not having credit affect your rating?
Well, having no credit is worse than bad credit. At least having bad credit lets lenders know you a bit. They have a history of your ability to repay loans. Having no credit is worse because lenders don't know you from a hole in the wall. They won't trust you, and therefore they'll have a harder time lending to you. You'll probably need a cosigner because they can't trust you yet.
What you're saying is credit isn't evil if it's managed correctly, and to get it started at an early age. I think that the evil credit theory comes from an older way of thinking from those who had poor credit and they tell others to stay clear. Now we know that credit isn't so bad. Should we put our efforts into getting a good credit rating?
That's right. If you want credit in 2 or 3 years, then it may take that long to establish a good credit history so that you can get that loan. Credit cards are easier to get with less than perfect credit, but if you want a big loan, like a mortgage or a car, then there's really no quick fix. Something else you should keep in mind is that the better the credit history, the better the interest rate you're going to get from the lenders, and the stronger advantage you're going to have to negotiate that interest rate. They trust you more, so you get a better deal. That's what we call more leverage. You're more than trustworthy, and they can see that based on your credit rating.
That would be awesome. I hate to ask the question, but is there anything else I need to know?
I can see why you were afraid to ask. You already know the answer. There's a lot more to know. But if you take everything into account that we've already covered in this podcast, then you are on your way to a good, healthy credit score. Everything else is just the gravy on top.
As you can see, having credit is not a bad thing. What you really need to do is respect your credit rating. Guard it with your life. Your credit history is who you are financially. It will largely impact you one way or another and will stick with you for years, good or bad. Without a good solid credit rating, you'll pay more for loans, be denied credit for cars or mortgages, and maybe even be denied an apartment or that new job. It is the basis of who you are and how much someone can trust you. If you're bad with credit, it says a lot about your personal responsibilities of paying others back on time.
That is absolutely true. If you are a parent, teach your kids as early as teenagers. Teach them just a little bit at a time. They won't seem to care or have much interest, pardon the pun. But when they get older, maybe around 18 or 19 is when it all begins to matter. They'll at least have a better understanding about what it all means. Or even better, get them to listen to this podcast and subscribe on their own. If you have poor credit, do what you can to fix it. Do what you must to repair the damage that you've done previously. Don't leave it for another day. The longer you wait to fix the issue, the longer and higher the hill is to climb. If you follow the basic principles as discussed, you will be in good shape and improve your broken credit. If you already have excellent credit, that is absolutely fantastic. I know someone personally who is 21 years of age, and that person is already in the excellent category. But by having excellent credit, there's only one way to go from there, and that's down. So again, protect your credit.
Do you have a credit history story or use methods to improve your credit not mentioned here? Please let us know. We would love to share with our audience. Rest assured, all personal information will be kept private. Drop us a line and reach out.
Absolutely. We would love to hear from you, our listener.
Well, Suzanne, that's another episode in the books.
Agreed. It was a good time for sure. Now remember to take back control of your money. Allow your money to work for you. You work hard for that money. Let it take care of you. Take care of yourself, and thanks for listening.
This is your podcast. We want to hear from you. What financial questions do you have? Are you starting a business and don't know where to turn? Are you having issues with your income tax refunds and don't know how to fix the problem? Or maybe you have other questions or suggestions for upcoming episodes. We want to hear from you. Drop us a line. We'd love to hear your thoughts. We compile a list of comments and suggestions. We blend those into every episode when appropriate based on the topic. Don't forget to like, share, and subscribe to the Money Nest podcast.
You can find the Money Nest on your iTunes, Spotify, or using your favorite podcast player. You can also go to our website at themoneynest.com, and we're now also on YouTube. We are everywhere. This is Suzanne and Mark from the Money Nest. Thanks again for listening. Bye for now.
You've been listening to The Money Nest with your hosts, Suzanne and Mark McKinney, brought to you by A1 Bookkeeping Services. We're your source to help you become financially successful while assisting you in building for your future. For more information, visit us at themoneynest.com or send an email to info@themoneynest.com. Don't forget to subscribe so you can be notified when our next episode is released.